Tesla was upgraded by Canaccord this week. The team is calling for a 40% rally in the electric car maker with a price target of $450. Dan Ives is the managing director for equity research at Wedbush and says that the laser focus for investors in the next few months will be gauging the Model 3 demand in Europe. Dan, thanks for coming in. Now, you're in Europe to try and scope out exactly what's going on with Tesla in your tour in the coming days. Tell us what you're hoping to learn.
Yeah, I mean, if you look right now, the big part of the Tesla story is Model 3, obviously coming to Europe, hit the port in Belgium last week. It's trying to really gauge, can demand match what we've seen in the US or potentially multiples of that? I think that's really the key of the Tesla story in terms of now it's changed from a production story to a demand story. And when you look at Model 3 demand, trying to gauge it specifically in Norway, Belgium, Netherlands and some others, that's really going to be the key to try to better understand what the total addressable market opportunity is for Model 3, with Europe being a big step.
So how important is Europe for the future of Tesla right now?
It's the linchpin, because if you think about it, in the US, the EV tax credits come off. You've seen demand come off significantly there, which was somewhat expected. But now the whole build-up, the drum roll, the red carpet was for Europe Model 3s to come. Because from a population perspective, it should be multiples of what we've seen from a Model 3 demand in the US. We believe 100,000 units is something that could be reached in 2019 in Europe in terms of Model 3. So this is key for the bulls in Tesla to really see what the demand story looks like in Europe as well as China, which is why these coming months are going to be key to see delivery as well as demand.
So the timing of deliveries, is that something that you're going to be looking out for as well, or is it mainly the focus on demand for now?
Yeah, partially it's demand, but also looking at delivery and trying to understand. There have been some logistics issues, especially in Norway, which is a strong EV country, and we'll be there. Trying to make sure some of those have been smoothed out. And look, the big issue, you want to make sure that delivery's there and deals are not pushing from 1Q to 2Q. I think so far so good within the band, but I think right now it's a critical coming weeks and months for Tesla in Europe.
What about North America? What's going on there? Because there was a report from Reuters over the weekend that there are some major job cuts in its US delivery center. So does that give us any clues about the deliveries?
Yeah, I mean, look, part of it is that demand shifting, at least in the first 6 months, from US to Europe. I mean, any car that's being produced in Fremont or Giga is basically coming overseas. Now, US demand, because the EV tax credit getting cut in half, and then we'll get cut half again July 1st, you've seen demand taper off. That's factored into numbers, but the big thing now is, can they produce a 35K vehicle in July, August? And what does demand look like across the masses in that mid-range vehicle? And can they do it profitably? That's the key, because remember, it all drives the profitability given the debt load that's coming around the corner for Tesla, which continues to be an overhang on shares.
So is that one of your key concerns, the level of debt?
Yeah, I mean, look, we believe a 30 to 35% chance that they raise capital, potentially $2 billion. But I'd say baked into shares, the worries are that could be even more pronounced. So I think right now, that profitability picture is key. Can they get through what I'd call a white knuckle period this next 6 to 9 months? On the demand story shifting in Europe and US, and pull forward in the US, now starting to go toward the mid-range in the second half of this year.
Now, you also said that China is a potential demand driver, but also a possible wild card. So how do you kind of go about trying to model that into your estimates when it's seen as a wild card?
Yeah, I think right now a big part of China will be the production side. Giga 3 being built in Shanghai, that's obviously the biggest CapEx project that's going on right now. So I think that's the first thing. They need that from production capacity for that to really grow that and ultimately get to 10,000 vehicles per week, which is the long-term goal. But if you look at China, it's trying to gauge demand in the EV side. A lot of domestic competition there. So that's why right now Tesla has a potential lead and a window of opportunity, but it's trying to gauge what price points and what demand looks like on Model 3. And I think that's something right now, along with Europe, that are probably the two linchpins to what's going to drive the stock in the near term.
What about the competition? Because there's so many players entering the electric car maker. One that's being increasingly talked about is Rivian. I mean, Morgan Stanley said that that could be one of the next serious competitors to Tesla. Do you expect Tesla to prevail within that increasingly competitive space?
Yeah, it's becoming crowded in the sandbox. And I think ultimately, if you look at Rivian, that's a good example of a company that could be a bigger and bigger competitor. And no doubt, you're seeing from BMW, Jaguar across the board, even the U.S. Ford, GM. But that's why it's so important now where Tesla has the supercharger network. They have the moat. They got the window of opportunity and the brand. They have a lead, but you have to seize on it. And that's why competition is fiercely, they have a bullseye on their back. But I think specifically in Europe and China, that's why it's very important what we see here in the next 6 to 9 months. Because if competition invades and that brand awareness starts to decrease, that continues to be the biggest risk in the Tesla story.
But you're sticking with your outperform.
We continue to be bullish on Tesla, $390 price target. In our opinion, it might be some bumps in the road, literally, but ultimately we believe they're going to get on the other side of that, given demand and production, what we're seeing.
So the Canaccord estimate is slightly over bullish.
I agree fundamentally with their thesis. I think from a price target perspective, it continues to be in a band. If everything continues to go well, you can continue to see a stock go toward those levels. But right now, heavy lifting ahead. They got to get past this next 6 months.
Dan, thank you so much for your time.
Thanks for having me.
That was Dan Ives, Managing Director for Equity Research at Wedbush. I'm Victoria Scholar, and we'll see you very soon.